The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 9th magnificent Monday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 42 points. She's trading out at 19,922. S&P is trading out at 2273. That's off 3 points. The NDX 100. The leader to the upside. Well, is it still the leader? Let me see here. Where's the semiconductor? No, it's the semiconductors that are the leader. But the NASDAQ, NDX 100 up 21 points, about 0.4%. NASDAQ Composite up 0.3%. That's 18 points, trading out at 55.39. The semiconductor index, that is up over 1% right now, 1.2%. Up $11, trading out at $9.19. Goldilocks is up about 0.9%, up $10 and change. Silver's up 17 pennies. That's trading out at $16.69. 69 is the temperature of where I am sitting. Well, sort of outside. It's a little bit warmer in the house. In any event, Lights Recruit is back $1.57, trading out at 53.30. Our man Garo might be in his SCO trade, so we'll go take a look at that. Maybe he's listening in. Leading the charge to the upside, you've got VCA Inc. Woof is the ticker symbol, WOOF out there. That's up $19, 28%. I don't know if that's IPO or what it is. Priceline, PCLN, that's up 0.9% or $13 and change. Insight Corp up $10, 9%. To the downside, Acuity Brands down $34. That's 14%. Off 35% is AMAG Pharmaceuticals. AMAG is the ticker symbol. Eagle Pharmaceuticals is also off 13% or $10. Boston Beer, Sam Adams, not having a very good day. That's off $9 or 5% to the downside. So let me know what you'd like to look at. You can send me an email, steve@tfnn.com. You can ping me in the Tiger's Den. Of course, any phone call will do. So let's go to our first request out here. Tom is asking about the natural gas. He is in DGAZ and maybe UNG. Let's take a look at the natural gas. Let's look at it in a couple different time frames out here. Excuse me, little frog in the throat out there, so we just had to water that frog down. Now, we're looking at the daily chart here for natural gas. And what we know about today, Tom, is that we just take a look at some natural areas of support. They have failed thus far, and that's going to be the bottom of its TAS weekly profile low, $3.19. As long as prices are below that $3.19 ought to be resistance. Old support should be resistance out here. Now, until price gets back above that, where can it head to? So this would help with regard to your DGAZ. The only real tool that I would have here for us to take a look at would be a retracement tool. And that would say getting back into the $3 level 3.00 to be exact out here, should be the next target. Now, if you're moving down there with a wide-ranging bar, you and I know that markets don't end on wide-ranging bars, and today is sort of a wide-ranging-ish type bar out here. That would then say you get all the way back to the swing point, maybe even to test out the bottom at 276. But I know that you are an intraday trader. It's really important, even though you want to take a look at DGAZ and UNG, which I know you do because those are the vehicles you're using to trade. We need to know what the underlying instrument is truly doing out here. So that then takes us over into the 30-minute time frame. Here is the February natural gas contract, by the way, is what we're looking at. Here's the 30-minute chart for it. You're going to see a bunch of red lines now. Horizontals, those are the TAS 30-minute profiles out there. And you're going to see some different diagonal lines. Those are just identifying trend lines out here. In all cases, with regard to the 30-minute chart, as long as natural gas continues to trade below $3.12 out here, it's got its next leg to the downside. That was a potential level of support. We're trading just below it. Getting back inside that box says that one of these trend lines, which is slightly above the top of that 30-minute market profile right now at $3.17, that would be the area you would be looking to. So between there and maybe about the 320. That's as we speak right now. It'll be a different set of figures 2 hours from now or 5 hours from now or 10 hours from now. Perhaps it'll be a different set of figures. But those should be your resistance levels. So everything here looks good with regard to those trades. Now, if we go over back to this daily chart out here, we go ahead and we type in UNG, and then we'll type in DGAZ out here. It's going to give us some different data points, some different profiles, but you can see here, this is below the weekly, this being the UNG that we're taking a look at. So it really suggests moving back towards about the 0.786 retracement. But the problem is that this is only trading, for the most part. Let's not talk about pre and post market, basically 9:30 to 4 out here. So it's just got it's banker's hours is what's this doing. But there's no banker's hours when you take a look at the futures contract. And so, this says, hey, 747, but all the work can be done inside the futures contract. And then you could see a shift higher or what have you. But at this stage of the game here, I'll put up DGAZ, but I don't believe that's going to provide us with any other important data sets out here. Yeah, the DG, well, I take that because you're long the DGAZ. So what would you be looking for? I've got a small little trend line out here that coincides. I like that word, coincides, with regard to its TAS weekly center of the box, and that's at about $4.37. So as long as you're trading above that, all looks good. But really, let's focus on the underlying contract and not these ETFs, these triple ETFs, and so forth. So, Tom, I hope that assists you with regard to that trade. I mentioned light sweet crude. Let's go take a look at it. Light sweet crude trading back $1.56 right now. So let's go see what this is doing. And it looks like it's going to try to run down to. Right now it's made a low it's tested, I should say, the TAS daily profile at $53.13 out here. That has held as support. Looks to me like more likely than not, light sweet crude is going to go ahead and get down to test the little rising trend line and the bottom and of its both daily and weekly market profile. So 52 and a quarter. 52 and a quarter is a number. What did I say it was? Okay, I take that back. The bottom of the daily market profile is 52 and a quarter. The top of the weekly market profile is 53.32. And then you've got a nice little trend line off of the swing point from November 14th and then November 29th. So it looks to me like that is where price is headed. So you break that trend then is no longer our friend out here. But I mentioned our man Garo in California who was looking, for example, here is also the same contract, but now I've provided on this chart here that we're taking a look at, some of the tools that he uses to determine whether or not to get into or out of a trade. And this is where taking a look at the underlying instrument versus the ETF, in this case here, the SCO, is going to give you different pieces of information. So, for example, with regard to light sweet crude, it has not gotten below the parabolic SAR. Those are the blue dots that are on my screen. Well, let me do this. Maybe let me make it easier for you because I've got a number of things out here. It's easy for me to see what they are all about, but it could be a little bit crowded. Maybe you're watching this on your mobile device or something like that. I want you to be able to see what we're looking at. So now what we have is just simply a chart. In fact, we don't even need the volume on this chart out here. There we go. So now all that we're looking at, just so that you can understand how this system works out here, is when you've got the dot below where price is at, that in essence is a stop out area or level of support. When that gets taken out, then it's time to go ahead and reverse positions. So here, I'm going to go ahead and put SEO up on my screen before we go to break. That gives us about 10 seconds. But look at SEO. See, SEO actually took out that high. So you have light sweet crude, the underlying instrument, is not actually confirming the move in the ultra short crude oil ETF. Always look at the underlying instrument. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So another request that has come in from Duffy in the Tiger's Den. He wants to take a look at the GDX. That is the Vectors Gold Miners ETF out here. So here is what we know about the GDX. Number one, that's a chart that we're looking at on my screen. What we know is that it formed a beautiful island bottom pattern out here. that was in between this formed during the time period of December 15th through December 23rd. We had a gap down on December 15th. We had a slight gap up on December 27th. There was about 1 penny away from confirming the island bottom out there. Very bullish pattern. So that was pattern number one. Number two, the nice bullish pattern that occurred out here in the GDX was price got above, closed above its TAS daily profile off of the bottom. That gave us a change in trend, Duffy. And that was on December 27th. Nice little follow through the very next day. Then you got into, or it got into on December 29th, the weekly profile. So that's a beautiful thing. And that says, hey, price likely to head to 23.61 to 25.35. Those become the new targets. Then just a few days ago, with good volume behind the move, on January 5th, we had volume of 135 million shares, and price broke the descending trend line. So the GDX off of the bottom is giving you every indication that the change in trend, you try to say that three times twice. What the Sam heck does that even mean out there? 3 times in a row. But this is just simply telling us that the trend has changed. Now, slight problem in the clubhouse out here with regard to the lead inside the GDX, and that is today's volume, basically meager, to say the least out here. Remember, 135 million shares is what broke through that trend line. Today, we're at 34 million shares as you're trading into the swing point. Just resting. Maybe it trades sideways-ish for a bit. I don't know the answer to that. You're slightly above a brand new daily profile. So as long as price is above 1974, no problem. Could price come back and test either of these trend lines, the descending trend line, as well as the new rising trend line? Yeah, that would you can make that case out there. That would make sense. Always depends on where you are at when you got into this trade, what you should do. If like subscribers and I, we got into this trade very early out here, we're not going to go ahead and shut this thing down. And we're especially not going to shut this thing down because of what's going on inside of your friend and mine. That is the correlation between bonds, Japanese yen, so on and so forth. Let me go ahead and take this. It's not really so on and so forth, but it's really with regard to just simply yen futures. So if we go ahead and we turn off bonds out here, and yes, we're long bonds as well, and a number of other positions. And if we take a look at this, now here's where, Duff, we might see price stall. And that is right now, we might. Japanese yen futures running right into the top of that TAS daily profile. Now, we got above it on January 5th. Same day that the GDX broke out, so too did the Japanese yen futures. But Friday was another day. Another day was really a pullback into test that its rising trend line out here. Today running into resistance. What you and I, anybody else who is long the miners out here, we really want to see this yen close above 0.86295. We're at 0.86270. So we've got just a few pips to the upside to get to out here. But ideally, we'll see a close above that. And then we see the run up to 87.55 out here. Now, on a 30-minute time frame, I don't even know why I said now, but I did say now. And so on a 30-minute time frame, if we take a look at the yen futures contract, it formed a Gartley buy pattern early or late last night, right about midnight, if I'm not mistaken. Yeah. At midnight was when between 12 and 12:30 is when the confirmed A to B equals CD, the confirmed Gartley buy pattern reared its beautiful head out there. And now what we have seen is every Gartley pattern, buy or sell, has 5 different potential outcomes. Typically, you will see outcome number 1 and 2 take place the majority of the time. I wish I could tell you I did a study and it came back to 74.5%, but I can't. What I can tell you is these eyes don't lie, and I've seen this pattern so many times to know that, number one, you're going to get to the 0.382 retracement. That was taken care of earlier this morning as price got up to 0.85986. And then prior to coming on to the show at about, 10 o'clock, 11:30 this morning, between 11:30 and noon, we had a nice little wide-ranging bar get into that 0.618. Outcome number 2. And now we've just simply moved sideways. But we came into that with a little bit of a vengeance. This says to me that what the yen futures are really trying to do, get stronger. They're trying to crack through that 0.618 level out here. That's 86. 41. If it can get above that, then we're off to outcome number 3, 86.72. Above that, outcome number 4, and that would be 87.12. And then above that, it becomes a beautiful thing. But right now, we've also hit a stalling point. So, I would not anticipate that it's just not a bearish outcome at all, but we're seeing a stalling point in the TAS daily profile, which in essence, that was pretty much hit here when price got up to 0.86445, pretty close to it, even though it's not shown on this chart out here. So we're really kind of at a intraday-ish type stalling point, but this is no reason. So everything that took place on Friday, beautiful, no problem, came back, tested the level of resistance that now has become support, and until things change, all things look good. So Duff Meister, I hope that assists you with regard to your trade in the GDX. Important to take a look at the underlying instrument here, not even being the GDX, but really what's going on inside the end. We really didn't take a look at gold, did we? We don't really necessarily need to, not until this correlation becomes undone. And it's a lot like that Guess Who song out there. This has not come undone, where she came undone, I think, or something along those lines out there. So now if we so what do you want to look at next? I think we want to look at next our next emailer out here, our next emailer in chief, and that is Bill. And Bill wants to take a look at Guild, Blue, and NVIDIA out here. And if possible, can you tell me in the short term where Guild, Blue, NVIDIA are headed to? Thanks, and awesome job. Well, I will say awesome job back to you as well. Now, let's go take a look at those three equities out here, get a feel for where they're headed to or what patterns might be forming. So let's first start off with, which one was it? Guild. Gilead Sciences, GILD. Is the ticker symbol. We'll start off, take a look at the daily chart out here. So what do we know about Gilead out here? Here's what we know. We know that right now it's dealing with its most recent swing point. This has basically been in... It's forming a nice little bottom out here. Well, let's go see if it really is. And I'm referring to the trading session of November 4th. Let me get my little window over there. No, November 4th, this thing made a low down at 71.39, 11 million shares. The next time down here, 12 million shares. Still couldn't bust, a little bit more volume. That was December 8th. And then testing that same area with 9.2 million shares. Now, that, Bill, is your nice sign of a bottom. How long will it hold? I don't know, but it is a nice sign of a bottom. No more sellers is basically the message. In fact, what this told us is there are buyers, because we saw a sign of strength on January 3rd, 11 million shares, junior sign of strength, but nice bar as we take a look at it. And you know it's always good to go to a nice bar. And then 15 million shares on January 4th. Then this thing has kind of been trading sideways and pulling back on light volume. As an example today, about 4.9 million shares. Where is this headed to was your question. And the answer, $80.10. Between 80.10 and 79.11. That's Gilead Sciences for Bill. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's continue taking a look at these equities here for Bill, and then we'll see if there's any others. Bill wanted to also take a look at Blue, BLUE, which is Bluebird Bio. Right now, this is trading out at 67.95. We can see this broke through a nice little descending trend line with the wide-ranging bar back on January 4th, about 1 million shares to the upside out here. As it made its high out here, not with really volume or anything along those lines, but it looks like to me, this is what I would say with regard to Bluebird Bio. As long as it's able to stay above its oscillator and change line, Bill, that's $67.12, and today was nothing more than a test of that area. I should change this chart so I can see something else. But in any event, as long as price is able to close above that, then your question was, where is price headed to? Well, the next stop on Bluebird Bio ought to be its center of the box on a daily. That's 71.90. Above that, then you're all the way back up to the highs out here. So watch those level. NVIDIA was the next question. NVDA would be the correct ticker symbol in order for it to come up on Stevie's screen out here. Now, this thing was the performer of the year in 2016, a little rocket ship. And now what we can see is at its highs out here, which has volume. So where is this headed to? Eventually, it's headed back to the December 28th high in the 119 area. Now, that may not be the case for a while until it completes a pattern to the downside, much to the chagrin of maybe holders of NVIDIA. So what does NVIDIA need to do out here? And what NVIDIA needs to do in order to reestablish its move higher, needs to close above Stevie's oscillator and change line. It's really yours. I just called it mine, but it's yours. I'm just borrowing it from you. And that's at that 109.42 area. Prices below it. Nice big old bearish engulfing key reversal style candle out there at all-time highs. However, with volume, so that is okie dokie. And I think what NVIDIA is attempting to do here is just simply make a bounce to form the C point of the A to B equals CD to the downside. 109.43 right now is the resistance zone that I would be watching. That is versus the TAS profile. Now, the competing factor here, and this will really tell us a lot, Bill, is this box where price is trading to, where price found support, by the way, that's 101.09, is really set up to say that buyers are in control. So we have the performer of the year, been on fire like there's a big, huge forest fire, but in a good way. And you are now inside. It's taken a bit of a reprieve out here. And you're in a box, a profile between 101.09 and 117.84 that really is in the hands of the bull. So this really should be able to get above that oscillator and change line and then make a head for the hills. That is the all-time high once again. If it doesn't, and that oscillator and change line or someplace below that acts as resistance and we start to see a sell-off, then you've got an A to B equals CD to the downside. I won't know till that C point forms, but if that is the case and you see it close below 101.09, it really tells us a change in trend has taken place, and therefore the conclusion would be price would head down to about 76.32 until I see the A to B equals CD pattern form. I really wouldn't know, but those would be the target areas I'd be watching. So a very strong stock has found support at where it should have found support that says that this really should go back up to test its highs or at least get up into the 117.84 level, but we just don't have enough of a confirmation to really say that that is going to happen. So I don't know if you're in this, looking to get in this hold. Long-term holders, we'd want to really look at what the long-term charts are saying. So, Bill, I hope that helps you out with Gilead, Blue, B-L-U-E, and NVIDIA. Let me see if there's any other requests out there. If not, let's go take a look at the general markets out here and get a feel for what they are doing. Of course, those of you that are longtime listeners, that means since Friday, you know that as everybody was celebrating the 20,000, I sounded the alarm and said that was the high. That Friday was the high inside of the Dow. Has anything, and I do mean anything, has anything changed my mind? And the cool thing is, and the answer is no, and the cool thing is that we called the actual day weeks ago with regard to when the Dow should form its high. And so far, so good out there. Now, with regard to the Dow, let's spend just a tad bit of time there, and then we'll go take a look at maybe like the ES Mini. In fact, we will take a look at the ES Mini. But let me just look at one thing here. Let's take a look at the summation index for the Dow. Hey, you're still below zero. So it's really been giving us a signal out here that it's done, it's tired, it's ready to retrace. You might say, where's it going to retrace to? We'll try to figure that out one step at a time. But let's go take a look at the ES Mini out here. I want to do that because when I take a look at the ES Mini, here, this chart is taken. Now, this you know I'll spit it out eventually. But this is the continuous contract out here. Now, this is the continuous contract just simply because you can't trade it, but simply because I need enough data in order to be able to get these beautiful horizontal trading range boundary lines. You're looking at green, red, and blue out here as if it was flag colors or something, and it's not. The blue represents the time period of a monthly set of data. That's the red. The blue, and you can see I've even got a little legend down here for you. The blue represents the daily horizontal trading range, and the green represents the weekly time frames, because a weekly candle close is going to be different or can be different than a monthly, and it's going to be different than a daily, and so on and so forth. And we're taking a look at co-located opens and closes. We don't care if it's an open or it's a close. We just want the body of the candle because, let's face it, the body of the candle is the essence of price. And the essence of price, if you were wondering why price is stuck at 22.73, not only does that happen to be a TAS market profile, which is significant resistance. This is data going back to, gosh darn, I don't know when. Let's go see, 1996, something along those lines. Let's go see. What is it? When does this time template start? No, 1997. I was off by a year. So this data that we're utilizing to identify these horizontal levels of support and resistance is a good data out here. And that says it's 20. Now, what happens if you get above 22.73? And let's face it, that can't happen out here. Well, where price would head to would be 22.99. That would be the top of its monthly horizontal trading range boundary line. But if we take a look at this, you're also going to see that price is now forming a little bit of a trend line. We're looking up here, this little, and when, you know, these trend lines, these are some trend lines that you and I took a look at some of these other charts out here. But until those trend lines fail, which right now price is trading right on that trend line, and Friday's close was a bit, you know, I just wanted to slap my head, which I did, because I was like, gosh, darn it here. Because I'm looking for this top out here, and I'd like to see it form. I'd like to see it form for you out there, because we'd really like to see a big crushing move to the downside, so that that becomes the buy of the 2017 timeframe out here. So we still believe that is going to happen. There are some things that could get in the way, but let's not combine too many things at once out here. But if you're watching us on Tiger TV, and I hope that you are, you can see that price is just stuck in this small little, it just doesn't know what to do. Can I break it out to the upside and get above 22.73? And the answer is, well, it hasn't been able to. Nor can it bust this really short term, because this really just began back here on the trading day of December 14th out here. Hasn't been able to bust through that little short-term trend line. But if it does, well, then the ES Mini ought to go target about 2,200 points. You're at 2266. So it's going to be that's the first target range. So it should be a nice move. We'll hope that it'll be a swift move out there, but a move is a move. In fact, sometimes we call it 100% move of the move. Dow's off 55. S&P is down 5. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 56. S&P is down 5. No requests that I see in line here. So if you sent me an email, whoever that might be, it hasn't come through. I don't see any other requests inside the Tigers Den. Let's just shut it down and have a little party out here. I'm all about that. But all right, let's go take a look at a couple other. I don't know. What do you want to look at? What would you like to look at? We looked at light sweet crude, the Dow, the ESI. Let's take a look at the NQ out here, because that certainly is the culprit, one of the culprits, not the only culprit, but a culprit out here. What's this? The EMs are all messed up here. Hold on a second. Let me see here. Okay. Looks like we've got Rich in Oregon. Oregon. Rich, are you on the line?
Yes, I am. Thanks for taking my call.
You bet. Straighten me out there.
Straighten you out.
Oregon or Oregon or
Oregon.
Oregon. Okay, perfect.
Yeah.
Are you a native?
Yes, I am.
Oh, great. And so how's your winter out there? Good?
It's cold. Right now we're waiting for the ice to thaw out. We live on the side of a mountain here, and it's been icy for about 3 days.
Is that normal this time of year for you?
Well, we've had a rougher winter than I would like. We don't usually get this much, but this must be our year.
Okay, all right. Well, hey, if you ever get tired of that winter, I'd say you come to Florida.
Yes.
Although it's very, I will tell you though, it's very cold here. So, or at least it was for a couple of days.
Well, I saw a news blurb that said out of the 50 states, 48 had snow.
Okay, I'm hoping we were one that didn't.
I'm guessing you probably in Hawaii.
Yeah, exactly. Now you want to take a look at. Thanks for calling. You want to take a look at the GDX, and so tell me what you're doing, and how I can help you here.
Well, I got into it. I've been reading articles over the weekend from some of the people that know it all, and that's tongue in cheek. That there's been huge outflows or large outflows from the GLD and the GDX. And I'm wondering, what are you seeing in the charts to make me stay in GDX or bail out?
Well, I didn't read those articles, so I'll do as you asked, which is what do I see in the charts, and it's really pretty simple for me. First, how long have you been in the GDX?
Last week.
Last week, okay.
Yeah.
So the GDX has a number of things going for it. The first thing is when we take a look at what the charts say, and there is a island bottom pattern which can identify major tops and bottoms. As an example, if you go take a look at JP Morgan, I'll just switch over to it. It formed an island bottom pattern, and that was on the trading day of February 11th, and that was right around a price area of $54. It's right now trading at $86. You pay attention to these types of patterns that are out there. Back to the GDX. So that's number one. That identifies a potential significant bottom. Number two is where you see signs of strength off of a bottom, and that's in fact what GDX had back on December 29th when it moved higher with 140 million. That actually says to us buyers are coming in. So with regard to the outflow scenario, there's actually like an inflow scenario into it. And we've seen other days where this has had volume to the upside, such as on January 5th out here, and that was last week, where there's about 135 million shares to the upside. If we take a look at just trends, and we believe in the trend is your friend scenario, which we should, it broke through on January 5th last week. It broke through a trend line out there, and that says that a change in trend has occurred. Today happens to be the second TAS daily profile. That happens to be horizontal levels of support and resistance. And as each of these form, I'll just turn something off on my screens out here. I'll try to. Let's turn off that trend line, that horizontal line, and I'll come back to my TAS profiles and turn off the weekly here. When we start seeing new blue horizontal lines form above previous ones, and when price is trading above those levels, this tells us that this is in full-out bullish mode out here. So the chart patterns say that the GDX has formed a very nice bottom. Now, you asked me a question. I'll give you a couple of things else, but you asked me a question, help you to understand why should you stay in it. what's your outcome of this trade? When you did get into it, what was your outcome of this trade? Was there a target area?
Well, actually, I was looking for, about 24.
Okay, so if we look for 24, and we just simply go put our weekly profiles back on the screen here, what this tells us is that at 2361 is the point of control. That is the area where both buyers and sellers are most comfortable. And from 2361 to 2535, there could be some hard sledging, some hard, some like you're waiting for some ice to melt. This would basically be the equivalent in the GDX of waiting for the ice to melt between 2361 and 2535. Doesn't mean that you should exit the trade. No, but when you achieve your outcome, and that's the reason I asked, maybe that's where you want to take a look at doing something, taking your profits, getting your principal back, whatever it might be. The real key to the trade in GDX, all the miners out there for the most part, is really going to be what is the Japanese yen going to do out here. Yen futures is really what I'm going to look at with you because I don't have any kind of a delay out here. And the correlation, Rich, is uncanny. It's more than uncanny. You've got to pay attention to it. But the direction of gold, which then would typically mean the direction of gold miners, is going to trade in the direction of yen futures. And if the yen US dollar, can get stronger out here, then the mining will just take off to the upside. And in the case of yen futures, they're just struggling in the resistance area. They're right on it right now. It's given us all indications that it wants to go ahead and strengthen and move higher. And if that happens, you probably won't have to wait long for the ice, so to speak, to melt inside the GDX. And so I just can't find reasons to actually sell the GDX.
Well, that's what I was thinking too. I appreciate your analysis.
Yeah, no problem. My pleasure. And, just always keep a stop in place because, unfortunately, you and I can't control what the market does out there. But really, this looks really good. And hopefully this will be we'll know when we see the yen, if in fact the yen can really garner some strength here, then this thing will really, really look good. But until then, wait for this.
What had me hesitating, Steve, was one of the biggest pieces of the GDX is ABX, Barrick Gold.
Okay, yeah.
And I just haven't seen a lot of positive up action in Barrick with volume.
Well, because and you were exactly right with regard to the fact that Barrick Gold is I believe it's the largest piece of the GDX out here, and it's because of Barrick Gold's island bottom pattern. Think J.P. Morgan. Okay, because this is even better than the GDX forming an island pattern of island bottom, is that Barrick Gold formed it, the individual stock. So Barrick Gold is on its way up to 1750, and then it's on its way to 1795, and it's had two nice signs of strength as well. Barrick Gold is a reason to be in the GDX.
Okay,
all right.
Steve, thanks.
You bet. That was Rich in Oregon. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow is off 51. S&P is down 5. But it's the NDX and the NASDAQ composite, the semiconductor indices. If there's going to be a spoiler to the party of the Dow having formed a top on Friday, that is it. And if we take a look at the NQ, we'll take a look at the daily. We should be able to get these in here in the next 4 minutes. We'll take a look at the NQ. Friday was a bummer for that call of the top, only from the standpoint that it surpassed its seventh wave move to the upside, letter G, on my screen out here. And that says, man, this thing could run higher for weeks to come, which was an outcome I was anticipating, just I wasn't anticipating it just yet, as you know. But and until price closes below 49.67.85, as we speak right now, that number is going to change here, each moment of every day. But right around that range there, it's strong like bull. However, the strong like bull on the 5-hour chart, 5-hour energy drink chart, just maybe you shouldn't think I'm so strong. In other words, price is moving higher, doing it with less relative energy. Last time we saw that pattern out here was back at about 2 o'clock, 3 o'clock, 1300. That would be 1 o'clock, 2 o'clock in the afternoon, December 27th out there. Price moves higher, it does with less relative energy. If, in fact, we were to see the bears show up, we'll know because they can't hide. They can't run. Well, they can run, but they just simply can't hide from our screens because they rear their head. We don't have that bearish reversal signal. Therefore, it can resolve this issue in its move to the upside out here. But the 5-hour energy drink is saying, hey, Steve-O, maybe not so fast. Maybe I'm not as strong as everybody believes I am. If you take a look at the 2-hour chart out here, 2-hour chart shows the same type of pattern. However, it recycled earlier today when it took out its seventh wave move, but price still moving higher, doing less relative energy. I won't show you the 30-minute chart because it's really showing the same thing. How many times do you need to see it? Well, I know that over and over works because that's how each of us learn out here. So there are patterns inside the NQ that make you want to say, something to think about. They'll really make you say, something to think about if, in fact, the bears show up. They are nowhere in sight as we speak just yet when it comes to the NQ out here. The semiconductor indice, if we take a look at it, I mentioned Stevie's red line, the oscillator and change line. That's priced at 924.49. So price is still trading below this. So the semiconductors, even though they are very strong today, in fact, the leader in the clubhouse percentage-wise as far as its move, and it did gap up. That's another sign of strength. Remember, gaps are our friends because of how they communicate to us. It still is not above 924.48. And so this could just be setting up the C point, much like we took a look at with NVIDIA. No surprise here. We're looking at semiconductors and NVIDIA. Hello, Steve-O, of course. So this, too, could be forming that C point of the lightning bolt, the A to B equals CD to the downside. So 920, let's call it 925 is going to be a key level out here in it. If I take a look at the NDX 100 out there, well, let's do this. Let's try to open up my little divergent tab, see if we can do that. Divergent patterns number 2. I've gone ahead and scaled some of these down so that we can just really go right to it. And do I have it in here? Yeah, we're going to take a look at the equal weighted ETF. See, the equal weighted ETF is the bottom panel of our chart. When there are divergences that form, meaning it goes to lower highs, it's not making a newer higher high, where the Qs are, typically is an indication of a top. None to be in sight. None are in sight right now. So guess what? It's not like it's the top 10 weightings inside the QQQs out here. It's basically all of them that are doing all the work. So if anything's going to spoil that party of Friday being the high, it's going to be the QQQ series, the NQ. The semiconductors, maybe. We'll see. Hey, folks, thanks so much for joining us. Stay tuned. Our favorite polar bear, speaking of frigid, David White will be up next on the Tom O'Brien Show from 3 to 5. We'll see you on Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.